Hello, traders. Cousin Vinny coming to you from theclosingprint.com, Sunday, the 29th of September, 2024. In this edition of your weekend video newsletter, we'll discuss the S&P 500 sitting right at the Vanna inflection point, bullish above 5750, neutral to bearish below, as the S&P 500 moves sideways in a narrow range. Sectors are showing a bit of rotation, so we're left with 11 bullish indicators, 6 neutral, and 3 bearish to start the week. S&P 500 remains in a narrow range, closing just below 5750 on Friday. Above 5750 we would be bullish, and below 5750 we would be neutral to bearish. RSI is still above 50, showing strength of trend, with MACD showing a potential temporary peak. Stochastic starting to recycle, with advanced decline percent for the S&P 500 marginally bullish. Mid caps, small caps continue to move higher. NASDAQ is a bit flat at the moment, still above zero. However, if we look at the New York FANG index, we can see that we're starting to fade. We're still at the 9 EMA, 21 days just below. If these start to show any signs of selling, RSI would drop below 50 most likely, signaling a potential retest of the 50-100 day, both on the same plane at this point, down there at 11,000. MACD starting to flatten out and stochastics is embedded, giving us another neutral indicator to start Monday trading. From a larger context, the NASDAQ 100 is giving us a bearish bias to start Monday trading. Look for a move back down to the 9 EMA unless we reverse this early Monday. From our perspective, it just looks like rotation going into the month of October, with the value stocks in the bottom panel showing more strength. Did make a new high. The 21-day EMA is pointing up and to the right, whereas growth stocks, semiconductors, tech, communications, software, internet, and cloud-based stocks showing a bit of profit taking. Still, the 21 EMA is pointing up and to the right, so we could come down and retest it, still be very bullish going into October if this rotation continues. In addition, we've got the New York Stock Exchange new highs minus new lows, simple calculation, giving us a bullish to neutral signal at the moment. We did have a little bit more selling on Friday, but we're above the zero line, showing New York Stock Exchange advanced decline, making new highs on Friday, despite the tech stocks pulling back. That's indicating, again, rotation. While the index itself is giving us blue elder sticks, just telling us perhaps a pause after 3 weeks of bullish price action. Considering those 10 tech stocks in addition to the other 5 that make up the S&P 500 largest weighted stocks, 32% of the index, S&P Equal Weight Index made a new high. So here, yet again, is another bullish indicator to start the week. In addition, the number of stocks above the 20-day were rising. They're not overbought. And the number of stocks above the 50-day is in the 83rd percentile. So while this is a little bit overheated, and the number of stocks above the 200-day also in the red zone, it could just mean that we're seeing rotation at the moment, something we'll have to watch for early Monday, Tuesday. For now, most of our indicators are bullish or neutral. We only have 3 bearish to start the week. Another bullish indicator we have for the week is junk bonds moving higher along its bullish 9/21/50 and 200-day moving averages, all moving higher. Significance here is these investors would be exiting the markets if they thought that we're going to have a substantial pullback. So at this point, this is more bullish for U.S. indices at the present time, unless we start to fall below the 9 and 21 day to start the week. In addition, the yield curve is uninverting. As you can see, we're starting to move back above the zero line. This is telling you the yield curve is potentially starting to steepen, Now we're starting to see the 10-year, the 20-year yield starting to signal a potential soft landing instead of a hard landing in a recession. So keep an eye on the unemployment rate because that's one of the biggest driving factors. For now, this is more of a neutral to bullish indicator going into the election in November. In addition, the 10-year yield continues along this downward path as bond traders look for lower rates, anticipating another 25 basis point cut in the short term, bullish for equities at the present time. And with yields moving lower, we've got bonds moving higher, in this case, the 20-year bond, making higher highs and higher lows on the weekly time frame, looking for a move back up towards the 120s before year end. Taken together with the US dollar making new lows, another bullish indicator for stocks, so long as it doesn't start to waterfall lower, showing any kind of concern that we don't presently see. We would like the dollar to hang out in this area more or less, but this is more bullish for equities at the present time. And with that US dollar moving lower, commodities like gold and silver, copper are moving higher. And of course, with copper moving higher, that's good for the economy, a forward-looking indicator, probably strength related to the Chinese stimulus, as copper is giving us a bullish indication into the month of October. One caveat, of course, is commodities in general used for building and construction. We don't want to see these take off to the upside, so this is something we'll be watching going into the election in November. But for the month of October, this looks like a higher high and higher low. It's not an alarming indicator at present, but something that we want to keep an eye on in the short term, nonetheless. Finally, we have Brent crude, West Texas crude, oil and gas, mostly giving us a bullish indication at present as far as inflation is concerned. With these moving lower, that's helpful for the consumer, which makes up about 70% of GDP in the United States. So if we can see gasoline and crude oil products continue to move lower, that would be helpful for the consumer and good for GDP. And one less thing to be concerned about regarding inflation and recession. Overall, bonds, currencies, and commodities giving us reason to believe we could be neutral to bullish as long as we stay above 5750 on the S&P 500. Once again, sectors are showing rotation with more of the risky stocks like biotechs, semiconductors, technology taking a break. Still bullish, but in most cases have seen consolidation and rotation. Whereas we look at financials, industrials, consumer staples seeing some action. It's above the 20-day. Utilities, of course, with interest rates moving lower, these fixed income investors will be flocking to utilities until that changes. Healthcare pulling back a little bit. But consumer discretionary pushing higher, as we just mentioned, with oil and gas products moving lower. It's given the consumer more money to spend as we ease into the elections in November. Software also pushing higher. Very interesting that this is above the 20-day, perhaps due to AI. The point is that price action is bullish in software as we start the week. We have fewer stocks on the IBD 50 watch list that look bullish enough to follow through this week. So make sure you check out these names. In addition to stocks from the Blue Dot Scan, in particular QFIN, which is in the Chinese index of stocks. And be mindful that international markets are seeing some action, so we want to keep an eye on emerging markets in particular, which has shown some flow into those countries. In addition to China stocks, which everyone should be aware of, are on a bullish tear. So keep an eye on these as they break a near 3.5-year downtrend and show potential for a follow-through. David Tepper was noted last week as talking about Chinese stocks. Just about every Chinese stock will be bought up over the next 6 months. QFIN showed up on the MarketSmith Blue Dot Scan. That shows relative strength is increasing with the stock breaking out. You can see Bollinger Bands opening up, volume increasing. MACD and stochastics are full on bullish. RSI is showing strength of trend. I wouldn't buy it on a rip to the upside. I'd be looking for the next dip like we had to start on Wednesday into Thursday, had we been paying attention to that one when David Tepper was talking about Chinese stocks. This is one of a handful that didn't rip to the upside like Alibaba and others, which I don't suggest chasing. Look for the next dip. It's going to give you an opportunity. Baidu, many of these rip to the upside, stocks that we're familiar with trading, JD.com. Don't get caught if this pulls back. Wait for the next base. These are probably going to continue in the intermediate term, 6 months to a year. At the same time, Tepper was asked by Mark Faber, I believe, what was he buying that he hadn't already picked up shares in. And he eluded the question by saying if he told everyone what he was buying, the stock would shoot up. So he was basically saying the stocks that have yet to turn are the ones that he's probably picking up shares. So this is one culprit right here. You can see over 130 million shares, 140 million shares trading hands on Thursday and Friday, but yet this hasn't taken off to the upside yet. Same thing with Baozun. These are stocks that did run higher several years ago. Baozun ripped higher on Friday. Okay. VIP Shops Holdings, Discount Clothing, also pushing higher. So keep an eye on these stocks this week. Alnylam Pharmaceuticals saw some activity, been producing higher highs and higher lows. We're looking for this one to continue, giving us a bullish bias for Monday, looking for a follow through. AGX also with a bullish bias for Monday, closing higher on Friday and attempting to move above Thursday's high this week. Aspen Aerogels, another stock giving us a bullish bias to start the week. Looking for it to take out Thursday's high. Bollinger Bands to open up. RSI to continue rising. MACD and stochastics are bullish. Looking for Aspen Aerogels to continue to move higher to start the week. The company reports again November 6th. Beat expectations last time around. All four metrics are green. You know I love when this is the setup with 195% earnings growth, 144% revenue growth, handily beating the consensus of 5 cents per share. Recall that financials, including insurance companies, continue to trend higher. If that's your bailiwick, like Mr. Flood, these stocks are trending. Doximity, from previous observations and watch lists, continue to move higher. Bollinger Bands opening up 3 weeks ago. Now they are starting to turn. That's telling you to look for this grind to continue. RSI showing muscle, indicating strength of trend is persistent. MACD and stochastics are both bullish. Volume shows that institutions have been picking up shares. The company beat expectations last time around on August the 8th. It reports again on November the 7th. All four metrics are green. Again, when these are green, look for continuation. 55% earnings growth, 16.8% revenue growth, beat top expectations, and handily beat consensus estimates by 6 cents. Hailing from the medical technology industry group. Look for Doximity to continue higher. Green Brick Partners in the real estate and builders industry group continues to build higher highs and higher lows, gives us a bullish bias for Monday. RSI is rising. The company reporting again at the end of the month of October, beat earnings estimates last time around. All four metrics are green, 22% revenue growth, 42% earnings growth, which is kind of unheard of in the building and construction group. Dallas and Atlanta markets showing tremendous growth, as you might expect. People moving out of blue states to red states in earnest prior to the election. Green Brick Partners looking very bullish going into the month of October. Interactive Brokers continues to trend. You can see the volume shows institutions have been picking up shares. Robinhood also moved higher on Friday. Look for a follow-through this week. Interactive Brokers reported in line with expectations. It reports again in 2 weeks. 3 metrics green. While it beat consensus estimates, it didn't beat Earnings Whispers numbers, so this one is not green as well. You can see the growth in revenue and earnings looks really good for Interactive Brokers as we look for this to continue higher, as well as what institutions' expectations are as they continue to pick up shares. TKO Group trying to break out to new highs. This is a leader in commercial power line communications and internet access. Look for a follow-through this week. Stochastics MACD, both bullish, RSI showing strength of trend. Just need to see a little bit more volume. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, September 29th, 2024. Keep an eye on the stocks listed below for potential follow-through. Do keep in mind that the Chinese stocks are most likely going to get a lot of attention this week and some international markets. In addition to the strength that we saw in financials, industrials, and utilities last week. That said, we will be starting off with a bit of caution. The S&P needs to stay above 5750 for us to continue with the risk-on appetite this week. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast, with stocks that have the best opportunity for following through. So be sure you check your inbox for that. Otherwise, enjoy the rest of your weekend. Take care, and we'll see you in the morning. Ciao.